Hi, welcome back to the show. I'm really looking forward to today. I get to talk about MACD. I spend a significant amount of time talking about ADX on a regular basis, and that's great. But just so you know, MACD has kind of been the indicator that I have used since the beginning. 30 years of doing technical analysis. MACD is the one thing that I've done from the very beginning. So I'm going to spend a little bit of time talking about that as well as in multiple time frames. Anyone new to the show should recognize that I try to take it to another level and add some things in that I think the average person, in other words, I'm not giving you just the basics. I'm assuming that most of you know what MACD is and how it's calculated. So we're going to start from there. The one other thing I would mention is that I want to encourage you to continue to, since the show is pretty new, I want you to continue to send in requests as well as any comments that you have. That's definitely helping me format how I go forward. Let's go into the agenda for today. And again, I want to talk about MACD in multiple time frames. I'm going to look at a confluence of signals. As opposed to looking at two time frames with the exact same signal, I actually think you want to look for signals that have some confluence amongst the two. So that'll make sense as we get into the example for today. And, you know, a few different, I would say, from my book, I call it a few different signals. One is a zero line reversal and another is a pinch play. I'm going to discuss those today. And again, I'm going to give you kind of a couple different ways I think that they can be viewed and how they can be useful. And then we're going to get into your stock requests. I'm going to go through and analyze those. Before I get into that, just to make sure you find my research at rabilstockresearch.com. If you go to the services page, you can put in StockTalk in the coupon code, and you will get the first 2 months for $50. My research, I send out 2 reports each week to provide ideas. I go through about 3,000 to 4,000 stocks and try and narrow down the list to a workable number for people. And I also look at, I discuss indices as well as sectors. Let's get straight into MACD. I'm going to go to our example for today, which is Delta Airlines. So just to keep this brief, I'm just going to go over the last section here. I think there's some pretty good examples. If we look back, we can see that this rally in Delta on the weekly was rallying up into some pretty good resistance after a nice run. It went from, in the teens up to the low 50s. And then we hit some resistance and started to sell off. There were some things taking place in MACD that I think can be useful here. So on the higher time frame, I've got a weekly. On the right side, I've got the daily chart. And so what I want to point out is I'm looking at this pullback. And if you notice what took place, we had, a pretty solid pullback. Looked like it was finding support. But notice how for several bars, we just sort of straddled this moving average. And this might be a position that you bought and you were saying, okay, this is a pullback and I want to get long. Or it might be something you're just watching. You got long early on and you're trying to determine whether this is going to survive here and go again. And if this pulls back and it starts to straddle the moving average and you're noticing that we're making this sort of upward glide move to the upside, go down and look at the MACD and see if they're going in the opposite direction. And if you notice, as this was moving higher with the moving average, the MACD and its signal line were both going in the opposite direction. I think this weighs heavy on price action. You have to be really careful. And when I see that, I start to think that the MACD wants to work its way down closer to the zero line. So this is something that I'm constantly on the lookout for. In fact, we can go back and look at the low and look at this pullback here where we're walking along the 18 as it's pulling back. And the MACD is actually going in the opposite direction to the upside. So that's sort of a bullish signal to be on the lookout for. Now, you have to look at the price action and all that. It's not, you can't just use it by itself, but something to be on the lookout for is straddling of a moving average and the MACD going in the opposite direction. And so it tends to be a pretty good signal from that standpoint. So I know now that I've got this pullback and a rally taking place that is losing some steam, and that there is support probably. I mean, we can go here and sort of define the area of support is really down here in, say, 37, 38, something like that. And I know at the time the stock is up in the mid to high 40s. So there's a little bit of room here to play if I want to trade. There is some room to the downside to know that before stock comes into support, but it would be very difficult to play just on the weekly. So this is why I go down to the lower time frames. And one of the things I do like to look for is a zero line reversal. So if I know I've got this pattern developing, this sort of failure of MACD as price is rallying, then I want to go and look at the MACD on the lower time frame, and we have this zero line reversal. That is where the MACD works its way up to the zero line area. It doesn't mean that it's going to stop right on a dime. Sometimes it will. Sometimes it'll overrun a little bit, just like this. And then we start to see sort of a reversal back down through the signal line as well as the zero line. And that coincides with a re-break of the moving averages. So it's really good confirmation. Sometimes if I like the pattern on the higher time frame and I feel pretty confident, I'll just jump the gun as price crosses, the MACD crosses down through the signal line. I'll go ahead and get short in this instance and play this from that standpoint. So I'm getting a little bit of a head start on the price action using the MACD signal. But what I want to zero in on is what takes place after we get that signal. We get a couple of little rallies here. Notice these are, they're almost like little bear flags that take place. And I use the MACD in this instance. I call it a pinch play, and it's where the MACD pinches back towards a signal line that is clearly, in this case, falling. It can happen when it's rising. You can see this sort of pinch as it was rising here, where the MACD pinched back down towards the signal line. So, this is the opposite of that. This is to the downside, where we get a counter trend move where a rally is taking place against the moving averages, and the MACD is rallying up against the signal line, which is clearly trending down. We get two back-to-back signals, two back-to-back rallies. These are really useful. I think these are the types of things you want to look for when you see that. And then I'm not going to go down to the lower time frame, but if you get these rallies, a lot of times you'll get a zero line reversal. So you'd be looking for a zero line reversal on the hourly chart where you're coming up to the zero line and then rolling over. And that would help you with the timing of entry. So those are like two different trading patterns. And I notice a lot of times when the first time you get this pinch play, which is right here and here, it'll often take place inside a range. So if you notice right now, we haven't really broken to the downside again, but we're getting the start of a new move to the downside, and this first pinch quite often will take place inside the range. So it gives you a little bit of a head start. Something to be on the lookout for are these mini pinches, and using them in conjunction with the signal line, the zero line reversal, I think is a useful tools. Now, I kind of rushed through this because, again, I could spend 30 minutes just talking about MACD right now and going through a ton of examples here. We're going to have to cover that as I go through the individual stocks, and I'll do more sessions on MACD as well. Let me know if you have any questions or comments on this specific part, but let's get into the stocks right now and do some analysis. So as we get into the stocks, I'll have plenty of opportunities to talk about MACD and maybe point out a few of these pinch plays as well as zero line reversals, just to get your eyes accustomed to seeing them. So let's just start with BABA. And the main reason why I actually did this stock on my own, this wasn't a request, and I wanted to bring it up because the whole point of why I look at multiple time frames, I think, is pretty evident when you look at a stock like this. So we've got this pretty powerful up move that turned around a little above 300 and started to pull back to the 18-month line, and really some pretty good support. And so if I'm just looking at a single time frame, I might have thought that I really wanted to buy this pullback around 250 as it started to lift off the moving average. but by going down a time frame. And this is the whole point of the reason why I look at multiple time frames and why I have a monthly, weekly, and daily up at the same time, is that I want to go down to the lower time frame and get a better idea of what is actually taking place, and looking at the price structure, looking at the momentum, and seeing if I have a real turn taking place. And by doing that, in certain cases, I might not buy. And in this case, it would have come to the conclusion, I would have come to the conclusion that I never really had an entry point off the weekly chart. Because if you notice, this one time that it rallied up here and got back above the 18, the 18 was still declining. The 18 had not come back down to the 40 at that point. And actually a really good example of, look at this pinch play developing right at the zero line. And we had several weeks to the upside where we were making higher lows, and we had a declining 18. So I would have definitely want to wait and see how this reacts here. And obviously it was a pretty violent decline. And then from that point on, we failed at the 18, failed at the 18. There's been no entry point using the weekly chart to get back in on the monthly. And now the monthly has rolled over. The 18 month is broken and the 18 is flat. So I just thought I'd bring this up. And in fact, I actually want to show you one other thing. Back here, look at this pinch play right here on the monthly. We got a breakout and then a nice little pullback on the monthly chart, and notice how this pinched back. And then if we go and look at the weekly chart at that point, that was right here, we can see the zero line reversal pattern developing as this was consolidating and getting back through the moving averages to the upside. So that's a perfect example of how you'd use the two signals on a MACD basis together. That's right here on a zero line reversal and here on a pinch play. Let's go on to the next stock. Sierra, SRRA. I got through this last week. I mentioned this really briefly, so I thought I'd just bring it up again. I didn't like the spike high and reversal back to support at 20. And once 20 is broken, I'm looking now to see whether this is going to hold the next support at 17. So kind of important now, we're pulling back to this level. If that doesn't hold, then we have to start thinking more like mid to low teens. But the reversal up here is definitely a little bothersome, especially when you look back historically speaking. It looks like it failed at pretty critical levels. TLT was one of the symbols that was sent across, and I did get a few other ETFs. Feel free to send ETFs over if you want. I know it's called StockTalk, but I still think ETFs qualify. So the TLT is bouncing around here. It bounced off the, let's look at the monthly chart, because what happened here is we came down and we're bouncing off the 40 month, and now we're rallying up to the 18 month. And I think this is doing a pretty good job of defining where resistance is. You can see support here, and then the breakdown level right about there. So I think this is contained in somewhat of a range or something like that. It just doesn't look like it's ready to make a huge move to the upside with this resistance in the 150s, and it has pretty good support underneath. So I'm expecting this to sort of channel for now, just not do a whole lot. We've got, MACD going one direction on the monthly time frame versus the opposite direction, and a rally up to the zero line on the weekly chart. So I don't see a lot of confluence right now. Let's go to EVIR. One thing I should mention, there are a lot of stocks with earnings coming out. I think a number of these have earnings coming in the next few days. So we just want to be aware of that. Got to be careful around earnings. I'm very reluctant to be a buyer a day or two ahead of earnings. Unless I'm going to use really wide stops and I see something that just looks perfect and I'm going to give it a lot of room, then I might be willing to do that. But other than that, I would be shying away from doing it right ahead of earnings. So anyway, this has made a pretty big move away from the 18-month line. It's consolidating back. I want to see this spend a little bit more time consolidating on the daily chart. The MACD is back to the zero line. And so we're in an area where I'm sort of intrigued by this, but it was sort of somewhat of a sharp pullback to 20. And I think this needs to test a little bit more in this area before it's ready to go again. So just something to kind of watch and I think worth keeping an eye on, though, based on the momentum characteristics. ANET. So really powerful move. I like the overall action here. The momentum characteristics on the monthly and the weekly look good, and the daily also. One thing I would say is if we got a pullback or a correction in the market that caused this to kind of dip back down to a bigger support area, that's really where I think the next opportunity would be. So this would be one I'd be watching and waiting to see if we get that opportunity. Right now it would be more of a hold for me just based on where it's situated. I thought I would mention also, and this was a good stock to use as an example. I got a question about different trailing stop methods, the chandelier, parabolic, and then any other things that I might use. And so I don't have enough time here to go through these in detail, but I do like the chandelier. I think it can make you very consistent. You have to pick out how far you want it to be from the last close or the last high. In other words, chandelier just hangs down based on the number of ATRs that you pick. So it's using volatility as sort of a trailing stop method, and as long as the stock keeps going up, it'll sort of trail underneath that. I think it's actually a very good approach. Parabolic is okay, but it really is very far away at the start of a trade, and might be too far to use by itself at the beginning. After it gets going, it starts to tighten up, but I would probably want to use parabolic with something else and not just by itself. Moving averages can definitely be used. In my case, I would probably use a 40 if I were going to use a single moving average. The 18, you can kind of get taken out of it prematurely during a trend. So you need to be careful about having too tight of a moving average unless you're, looking to make more short-term trades. And then the swing lows, I use those combined with the fib level. So in this case, I've got a swing low down here at 200. If I make a big move, an uninterrupted move, I can't raise the stop because there's nowhere to put a stop except keep it down here. So once I get too far away, I would look for a 61% retracement and put it below that. And in this case, it would have kept you in on this pullback here. You'd have had a stop just underneath right about here, and it would have kept you in for that move. Now we've got another big move to the upside, and I would probably be putting the 618 stop in place as well here. And as long as it keeps going up, I would keep raising that 618. Keep it below the 618 retracement, and that should keep you in for the bigger trends. Now, if we make a pullback and then go to a new high, then you can come right underneath that swing low. So that's kind of how I would use those two together. I think it's a pretty effective tool for trailing stops. So just briefly thought I would give you a few ideas there. Let's look at UNG. Natural gas has definitely been coming to life here. I like the move that's taking place. We look at the weekly chart. Pretty strong move. Look at the ADX starting to kick in. Strong green DI. We're coming up against this high here, 1415. I expect this to take a breather. It might actually get through that first and then start to pull back, but we're getting a little stretch from the 18-week. So I think we're due for some kind of a pause or a pullback. But based on what's taking place, I think that pause or pullback is probably a buying opportunity. It's something to be on the lookout for on a pullback. URI is uranium. Now, I want to show this on the monthly because this is a huge breakout, a huge turnaround, and we have massive volume coming in with very good ADX characteristics. Now, because we made such a big move in a short period of time, I'm sort of the opinion that we're going to need a little bit more than just a quick pullback. I think this is going to take more time. The MACD has started to roll over here. I would actually like to see this work a little bit closer to the zero line. Maybe it doesn't come all the way, but spend a little bit more time consolidating here before it's ready to start its next move, which I do think is coming. I think there's more upside coming in this. It's really a question of time. I would be very reluctant to just go ahead and buy right here without a little bit more evidence that the trend is truly turning. But again, overall action looks pretty good from a bigger picture standpoint. I've got a few Canadian requests, so I'm gonna throw these out. I'm going to do a little analysis on these, so just two of these back to back. A pretty nice move in this BCE, moving up into this resistance area. Let me just pull up this chart here. It's a little clearer to see. We can see we're at 62. We're kind of at the lower end of this zone of resistance between 62 and 65. I would not be looking to be a buyer when we're that close to resistance. If anything, maybe I would be looking to trim it a little bit. But the more important thing to me is the fact that the momentum is improving here. What I would want to see is a little bit more consolidation take place, or a pullback or something like that gives me a little bit more room on a next leg up to make some money. Because right now, I think it's just too close to this resistance zone to be a buyer. I would hold this if I were in it and see if we if we show any signs of distribution or anything like that. Then that might be one way to be considered taking some profits or something like that. But right now, just too much resistance in the short term to really want to be buying this. TRP is rallied up to the 65 area. I think that is really the key zone. We're caught kind of between support at 60 and resistance at 65. Until this gets through 65, I don't think I'd really want to do a whole lot. I might have wanted to buy this pullback here, but we don't have the signs on an ADX basis of real strength. So I would be more thinking that I want to wait for this to get through 65 before I'm really ready to do any buying. Valvoline, VVV, big up move, and now we're pulling back, and we have overrun the MACD on this pullback. The ADX is really strong, so this is a stock that I would consider, but the way I would handle this is I would really want to wait for a sign. Let me just pull up a straight line here. If we break this downtrend line, which we're trying to do, now what I want to see have happen is have it move up and then maybe pull back and test this low and then turn up from there. So I'm getting a real improvement in the price structure on the lower time frame, and that tells me that things are getting ready to turn back to the upside. I want to do that in a situation like this where we've pulled back a little too hard and kind of broken the 18-week line in the MACD. When I see that, I just want a little bit more evidence that things are turning back around to the upside. So it's a name I'd be watching, but just based on the distance from the 18-month line and the fact that we're pulling back after a big run, I want more evidence that this is turning back to the upside. ASAN, I don't have a lot of history here, but just recently we've made a higher high in price, and the MACD is making a lower high, and it's not getting back above its signal line. And notice how ADX is dropping back down below 25. It would make me very reluctant to want to be a buyer here. I'd be looking for this to pull back and give me a little bit better entry closer to the 18 weeks sometime over the next month or so. MOX. I don't like the descent of this decline. Look at the angle of this decline. Too violent. Look at this on the weekly. Really nice move to the upside, but then the way this is pulling back to the moving average is highly relevant to me. It's just too vertical. Too much velocity to the downside. And when I see that, I would be expecting resistance on a rally. I would expect a channel or trading range to form above this moving average, hopefully. Hopefully it doesn't rally up and then come back down and break. But we're pretty far away from the zero line, and the ADX is way up at 66 still. So I'd like to see this come down a little bit more. It just needs time to work off such a huge move to the upside and a violent decline in the most recent sell-off. Let's look at BA. So, this made a pretty good move with the recovery, and then it started to get into some resistance here. The momentum wasn't good enough. ADX never got back above 25 during these rallies to really be a convincing turnaround. So I'm sort of thinking that 200 is support. And right now, like 250 is resistance, and we're probably going to channel for now. One of the things I thought I'd mention, though, is as this was rallying up, it got through the 18-month, but the 18-month is still declining. Now, we had a recent sell-off that got down pretty close to that 18-month line, but what I really want to see is this 18-month cupping around and starting to move in the direction of the trend. So if we're really trending to the upside, we want to see this 18 start to cup around and provide support for the trend. And it just hasn't happened yet. We're not there. So it's one that I would keep watching. As long as it holds above 200, I think it's in pretty good shape. But I wouldn't be looking to be a buyer until I saw better improvement on this monthly chart with the moving average supporting what's going on. MT here. So really nice action. This is a steel stock. Focus on the weekly. Notice the 80X pattern, very strong, move to the upside. We had a pinch actually here that developed and led to another new high, but now we're up against this resistance zone in the mid 30s. It's a little bit more difficult. It doesn't look like MACD is going to confirm here, but I wouldn't necessarily just sell at 35, but I would be watching and seeing how this reacts. It's I think a little late to be a buyer because it's too close to this resistance and the fact that we're pretty far away from the 18-month line. So, you know, it's a stock that I think is in a pretty strong trend. It's more of a hold for me than a buy at this point. Now, if we got a little bit of a pullback on the daily chart back to the moving average, say 32.5, something like that, and it met up with the 18, then I might be inclined to look at this as a potential trading play based on how strong the momentum is and the recovery rally here. So some interesting things developing, but we have some resistance we have to be on the lookout for. Electronic arts, I think, is somewhat intriguing. If we go to the monthly, we've rallied up against this high at 150, and we're not seeing a lot of selling coming in. There's really not a lot of sellers showing up. So this sideways pattern, I think, is constructive. One thing that I would tell you, though, is based on how this is walking along and holding above the zero line with low ADX, I think at this point I want to see this break above 150. If it can do that, then I think I'd be a lot more interested in what's going on here. So, you know, I think this is the type of stock that I don't want to pre-guess and jump the gun or anything like that. If it can get through the 150 mark, then I think it is a lot more attractive to me, and one that I would probably be interested in buying. Now, again, you got to watch for earnings. I think they're coming out in the next week or so on this one. We are out of time. Thanks for watching. Please feel free to reach out to me. Here's my contact information. Your comments and suggestions are always appreciated, so keep sending those along. And also send your stock requests to stocktalk@stockcharts.com. Trade well, and we'll see you next week.
Hey guys, Dave Keller here with stockcharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.